And we are live to today's panel discussion with our four wonderful guests here. Today we would like to talk about gas fees, about different ledgers, Ethereum, Solana, and maybe also some alternatives like L2s. And the topic will be around how do gas fees affect the DeFi ecosystem. Essentially, what we saw over the past 2 years, that DeFi has been growing at a very rapid pace. It's all started with Compound in 2020, offering some type of yields. And nowadays, I think it's fair to say that there's a very vivid ecosystem with many different kinds of services, whether it's a DEX, lending services, or also perpetual trading. But more to that later. First of all, I would like to have a little introduction round with our four panelists today. Maybe Sagar, you could start first, quickly explain who you are and what you do.
Thanks a lot, Christian, for organizing this panel. Hello, everyone. My name is Sagar. I'm from Blockchain Founders Capital. We are early stage Web3 investor. We invest in pre-seed and seed stage startups, mostly like blockchain use case based startups. And we help them with like a 360-degree advisory after investing into them. So if you're an early stage startup founder or if you are looking for funding, feel free to reach out to me or just go to our website, bfc.vc. And I'm looking forward to this amazing discussion with Peter, Freddy, and SolaX Dex, who is Anon. And yeah, thanks a lot for the invitation.
Thank you, Sagar. The next, Freddy.
Yeah, sure. I'm Freddy. I work for Blockdaemon. We are an institutional infrastructure provider for many different chains. So our institutional customers, large TradFi banks, financial institutions, and also large crypto, let's say, protocols that need to manage their funds. They rely on our infrastructure, either node as a service or data API or staking services. And my specific role is the Ethereum ecosystem lead. So I'll be on the Ethereum camp today, while we're by all means a cross-chain company. My role is specifically being the expert on Ethereum, and yeah, always happy to connect and yeah, discuss these things. So thanks for having me.
Thank you, Freddy. The next, Peter.
Hey, thanks for inviting me for this panel. I'm Peter. I'm co-founder at Unstoppable Finance, and we're building Ultimate, and that's a wallet that should bring DeFi to the masses. So we make it very easy to onboard on the Solana blockchain and use different protocols. And going forward, we want to provide the best professional trading experience on DEXs, kind of like in the blockchain world. Before I co-founded Solaris Bank and built up Börse Stuttgart digital exchange. So I'm in the crypto space since end of 2016, and somehow traveled through different positions in the finance world, how I always call, like, from TradFi over CFI to DeFi.
Thanks a lot, Peter. And then last but not least, our Anon from SolaX Dex.
Yeah, thank you very much, and thank you for inviting me to the panel discussion. So yeah, I'm one of the core team members of SolaX, and SolaX is one of the first smart liquidity protocols within the Solana ecosystem. And what we do differently than the existing solutions is that we that our protocol manages the liquidity. And for example, if you come to our platform as a liquidity provider, you only need one asset that you can stake in order to provide liquidity towards multiple pools. And everything in the background is done by our protocol. So that means we have a way easier user experience, and it makes it also easier. So we have a very similar approach like you, Peter, and makes it very easy for users to provide liquidity. And if you want to test our protocol and our platform, we are live. Just hit solax.so and try it out yourself. Thank you.
Perfect. Thank you very much to all of you guys. I'm very excited about this panel today because I think we have a very good mix of knowledge in regard to Ethereum, but also to alternative L1s with Peter and the SolaX Dex, and obviously also Sagar, who's, I think, a little bit in between Solana and also Ethereum. And I would like to kick off this discussion right away with a little look in the past. During the last bull run, I think we can all agree that it was all about smart contract platforms. So essentially, Ethereum was always the incumbent, the #1 smart contract platform. And what we saw during the last bull market was suddenly that there's not only Ethereum, but also Avalanche, Solana, Phantom, many different L1s suddenly popping up. And also very good at attracting DeFi ecosystems in regard to DEXs, any type of decentralized application. So the first question would be towards you, Peter, and also afterwards maybe the SolarX DEX can answer that. What was your motivation to go for Solana, and why was Ethereum maybe not so suitable for your endeavor?
Yeah, so when we started with Unstoppable Finance and building Ultimate, so this was kind of in the summer of DeFi, right? So we've seen all the protocols popping up, and especially on the Ethereum blockchain, a lot of activity and a lot of projects starting, and also a lot of users being attracted. But we've already faced the issue with the high gas fee, so which was the topic of the discussion today, there was also already the layer 2 war starting, kind of different projects ramping up, like alternative approaches, and it was not really clear like which one will be the winning one. And so we thought, okay, so let's really explore what other options we have, and we found that with the Solana ecosystem, there was like an alternative layer 1 blockchain with the promise that the layer 1 itself is already fast enough to process like many transactions. So like being possible to build like the Nasdaq on chain, which is like the claim of Solana, and at the same time really providing low gas fees from the very first moment onwards, and of course we looked at different metrics, so like how much TVL is there in different DeFi protocols, like how many DeFi projects have been started, developers activity, and also on all those nodes, the Solana ecosystem has been pretty active, kind of I guess the second largest DeFi ecosystem, also pretty strong and maybe the strongest in the NFT space. Plus a lot of developers being attracted, like in a also interesting language, which is Rust. So where we thought, okay, so let's maybe wait until the layer 2 war is at least a little bit more clear where things are heading. And so we started to build on the Solana blockchain, and going to launch on Ethereum also pretty soon. So we will be multi-chain in the future, but yeah, so we thought let's start with Solana and then at Ethereum once it's more clear where everything is going.
Thanks, Peter. Then SolarX.
Yeah, Peter, that was very detailed. So it's very difficult for me to add reasons to build on Solana, but maybe I can start with some more personal background. So actually, SolarX was not my first project within the Solana ecosystem and on the Solana chain. Before that, I've also advised another project, an NFT project, music NFT project, and I personally really liked and I experienced the community during that time. And that was back then when Solana was quite new. And that was my personal experience that really got was attracted to Solana because I liked the community and I liked the speed, I liked the usability, I liked how easy it is still is to use the wallets. And but on top of that, of course, when we had when we founded SolarX, that was 1 year or a little bit more than maybe 13 months ago. When we founded SolarX, we had a look, of course, at facts like the TVL, the DeFi ecosystem, and what we then realized, I mean, Solana is definitely a very attractive layer 1 solution. And like you said, Peter, it's the best alternative, in my opinion, to Ethereum. But what we realized when we analyzed the DeFi ecosystem of Solana, we realized that there are no protocols that are existing on the within the EVM ecosystem that handle liquidity in a different way. Because what we realized, there are a lot of DeFi protocols, there are DEXs, but all of them work like the more traditional way. They have the more traditional approach into in terms of their liquidity pools and their liquidity management. And as Solana back then definitely was the number 2 DeFi ecosystem after Ethereum, we thought, okay, this is definitely a case that there have been different approaches how to manage liquidity within the Solana ecosystem. And actually, that was the business case that we found that was missing in terms of the whole ecosystem within Solana. And yeah, that was actually, I think, one of the main reasons.
Yeah, I could also still add one more aspect, because also like our promise is so we want to bring DeFi to the masses, and kind of if the gas fees had been like super high in the past, and there's like the retail user trying to deploy a few cents or like a few dollars just to try out DeFi, just to get like a feeling for it. It's of course like a really huge promise. So if you can really enable that use case, like people tapping with their toes into the cold water and then just like getting more comfortable and then like distributing money over different ecosystems. But yeah, so we thought at a given time, it was a really positive opportunity to start or to onboard people to the Solana ecosystem.
Yeah, I can just also say from my personal experience, in the height of the bull market, doing transactions on Ethereum was sometimes a bit painful. That's also where the next question is going a little bit. I can remember that I think I once used a flash loan, which is I think very gas intensive, where I think I quickly ramped up a few $100 and also gas fees on Ethereum. According to your personal opinion, like what is like the typical Ethereum user? And because I've very often heard that it might be more of a whale game, so that you need to have a certain amount of capital already to be able to do profitable transactions on the Ethereum ledger. I think maybe Freddie can also connect to that question, but like who's for you like the typical user on the Ethereum ledger that can also afford like the transactions? Because as Peter just said, that he was clearly aiming also at the retail users who possibly cannot always afford like a few $100 for like a simple transaction.
You want me to go first? Well, I'd say it's hard to say that the typical user, because I think Ethereum has them all. That's the fact. But yes, and number two remark is like a flash loan transaction. I wouldn't call it a simple transaction. That's okay, rather sophisticated and not for everyday retail users. But I agree. I mean, yeah, gas fees are higher on Ethereum than any pretty much any other chain. That's really bad for mass adoption or for retail users. We can totally agree on that, and I'm not going to lie about that. I think obviously right now the gas fees are pretty low, and so it depends. And I obviously would argue that the high gas fees are a sign of usage and demand for the block space. And I think that's also what my fellow panelists were saying, that the largest DeFi ecosystem was and probably still is on Ethereum. So DeFi is certainly about adoption and make it easier. I totally find these very good goals, basically. But to me, DeFi is also about interoperability and the money Legos, building on top of each other, etc. And that's where the networks effect come into play. But I don't want to deviate too much from the question. So I don't think there's this typical user, but what I would definitely say is that we see, and we might touch on this a little bit later on, that right now retail or low value transactions are moving off towards the layer 2s on Ethereum if they want to stay on Ethereum, basically benefiting from the security and also benefiting from the lower gas fees. But as Peter said, it's not clear which one is going to be the dominant one, or if there's going to be a dominant one, if there's be several, and then we have liquidity fragmentation and also all sorts of other things. So yeah, I mean, I'm always happy to see experimentation on different chains and with different models and whatnot. So that's all good. Because in the end, and that's sort of my personal opinion, in the end, they're all going to come back to Ethereum, right? So if they've grown, and I certainly think Peter's approach was very smart in terms of like for a small startup and use the things that are available today to get traction, etc. And then you can see and build from a position of strength and adopt other chains or other networks to tap into their liquidity and network effect. So I totally think that's a valid strategy, and I think that the typical users on Ethereum are sort of dividing themselves up into the layer 2s for everyday usage, and then the layer 1 is just going to be the larger settlements.
Mm-hmm. Actually, I have to agree with you, Freddie. Just a quick example from just last week. I tried to bridge some DAI from Optimism to Arbitrum, and there was literally no liquidity on any bridge. Like, I think Hop Exchange was working, but I had a list like of 5 or 6 different bridges. So essentially, Ethereum mainnet always works, right? I think this is also like one of the things that we have always to state here, that Ethereum is a functional ecosystem where you would not encounter such kind of problems. But now I'm very interested also in Sagar's take in this, because obviously Sagar's background is VC, and you guys are also invested in many different projects. How is like this gas fee topic relevant for you guys?
So of course, first of all, like under the BFC and previous my position at BlockRocket, I mean, we are basically like 2.5 Web 2.5 investors. So we do only equity investment. We are not a deep tech protocol investor because we are not a software engineer, right? So like some of the big VC firms who invest in layer 1, layer 0, and layer 2, these guys hire the like people from Google, Facebook, or NASA, you know, like software engineers, so they can do the deep level tech due diligence. Coming back to this actual topic, I think everyone made my job much more easier. So I'm talking about as an blockchain crypto guy, and then I will come back later to as an VC. Okay. So first of all, my thesis on Ethereum and Solana, I have a really good relation with both the folks working there. So I don't want to hurt anyone. So I will act as a catalyst between both of them. But we have to understand, first of all, like, I do love Ethereum, but Ethereum is like first Genesis block was mined in 2015, okay, in July or June. And Solana came in August 2020. So first of all, we had to think logically, let's be intellectual honest. Like you cannot compare a 3-year-old kid with like 8-year-old kid, of course, because they're both of them have the different IQ level. So if somebody like from the Ethereum ecosystem, they would like to perform like Solana blockchain as same as Ethereum, then I'm sorry, I'm also a big Ethereum maxi, but that's how things doesn't work. So if you think like a technical perspective, things need some time to build. Okay. So I will quickly walk you through the like some of the biggest bubble in the history of our humanity. So it started with 18th century with railroads, early 19th century with like auto or like a cars, right? And then back in radio, then 1980 with .com bubble and internet and biotech, right? And after like a biggest .com bubble crash, we got like Facebook, Google, and Apple. Okay. So these all things took time. It started in 1980, and now we like our generation is getting perks or like getting fruits out of this whole tech era, right? And we are only 10 to 12-year-old in like whole blockchain space, and blockchain space came into limelight, I think since 2016, 2017, since I started my career in blockchain. So we got to give some time to any individual blockchain to, you know, flourish and build a solid ecosystem. Moving further, I think the Ethereum gas fees was really higher. So I would like to ask like a very honest question, like the gas fees went up because of the trading speculation, or there was like actual use case was going there? I think that was completely speculation because everyone wants to front run others transaction and then wants to buy and dump into the other guy, right? So there was like a zero sum game. So the trading fees move higher, right? In last 2 years. Now you can see like a gas fees like 15, 16 wide, right? It's not like because of the Ethereum merge or like because of the proof of work moving to the proof of stake. No, because the demand is lesser now. There's like a less users are every day interacting on the blockchain of Ethereum. And at the same time, like Solana was down a couple of times, and whole Twitter for like a gang or like attacking Solana, you know, I think that's also not the right approach. Our industry in total, it's a really small industry. So if you keep fighting between like two different blockchain, then I think we have a lot of people like, I don't want to quote that gentleman name, but I think he quoted very well in last bull market that we have to fight with like, I'm not a libertarian by the way, but we have to fight with government in terms of regulation. We have to fight with institutions so they can start adopting all blockchain tech, right? And using like a DeFi and also we've seen like a massive nightmare from CeFi side. I mean, just we witnessed like FTX. But still the blockchain space is still allowed, fundamentally is the same. So you got to give some time to build the protocol, right? And then when it comes to gas fees, I think I already justified my thesis that it's all about hype. So I think now is the right time, like next 6 to 12 to 18 months going to be really crucial for our industry. Either it's a blockchain of Solana or a blockchain of Ethereum, that you build some use case driven products, or you start solving some real world problems, then you can make something big out of it. And that's how our fund as a blockchain founders capital is also relying on that thesis. Like, we only invest in startups trying to solve some real use case driven like a problems. Like, we don't want to speculate on any token or any other. I'm big favor. I'm like a big fan of token, by the way. But when it comes to managing the money from others people and managing the fund, you gotta deploy your capital where actually that startup can generate the revenue, over the time. So basically, that's also one of the thesis, that we only invest in equity. And yeah, I think that's pretty much clear. That let's see how it develops over the time, and we will see some fruits coming out of Solana or either Ethereum ecosystem. And I still think Ethereum is the best layer. So if somebody trying to claim like we are going to build like next Ethereum killer blockchain, then I'm sorry, guys. You gotta touch the grass. Let's build like something fruitful. I mean, there was the article last year that where you can say like blockchain, you have to treat blockchain like a city. Okay. So for example, I live in Munich. I know the Berlin is much cheaper for me, but I still like to live in Munich. So that's the same way. Like, let's say like if Solana or Polygon layer 2 or Arbitrum, they're providing like a cheaper transaction fee, but I'm sorry, I'm really happy with Munich. So I'm not going to go to like a Berlin or some other cities. I'm going to stay in Munich. So it's the same with like some people who are really convinced with the Ethereum, they're going to use the Ethereum. But let's say like some gaming or NFT use cases, they need like a mass, like mass crowd, like mass volume people start using. So that doesn't make sense to live in Munich. I mean, I think for that side, you should definitely use like layer 2 solution or Solana for cheaper gas fees. So you can, satisfy your motive. Yeah.
Mm-hmm.
So which blockchain is Munich and which one is Berlin, like Solana or Ethereum?
I think that's not the relevant comparison, because I think the meter price is almost 5 to 10% different in Munich and Berlin. But I think we can compare like Tokyo with Dresden. Then I think the Dresden is Solana and Tokyo is the Ethereum.
Yeah, I was just at that moment thinking, oh, I think we need an office somewhere in Berlin, Leipzig, or Dresden.
Yeah, I see. I think that you can also really say it like for the different types. I live my personal experience, the different types of DeFi product you want to offer. You will certainly take a look at the different ecosystems. And one thing that really surprised me, for example, was there's something called power perpetuals. It has been invented by Paradigm, and up to today, as far as I know, power perpetuals, for example, are only available on Ethereum with something called Open, and at the same time also on Solana. So especially in regard to like DeFi applications, it's, I think, very fair to say that there's many mature applications already being built on Solana, and depending on what use services you want to offer, let's say, for example, some type of structured products, like Friction. Friction, I think, is also integrated with you, Peter. You can certainly take great use of Solana and build such kind of product. So I think it also depends on like, what do I want to achieve with my application? You would have to compare with the different ledgers, check for the ecosystems, and then decide accordingly, okay, what fits my personal taste, I think. And now I think we can do a little shift, also to go a little bit deeper into Ethereum, because I mean the topic was like, are the gas fees on Ethereum killing the DeFi ecosystem? Here's like one good question, I think. The amount of Ether that is staked essentially reflects also the security of the network. So that essentially means the more Ether is staked, the more secure the network, because we essentially have more capital for the validators. At the same time, however, the amount of illiquid Ether, so staked Ether, increases, and therefore the supply of liquid Ether, so the Ethereum that can be traded at any type of exchange or decentralized exchange, becomes less, which further inflates the price of the Ether token. Now we come to my question. Maybe Freddie, do you think that there's like a clear trade-off between essentially the gas fees, which are paid in Ether, and the security of the ledger in regard to Ethereum?
Well, I definitely think there's a general trade-off. Well, there's always trade-offs, right? If when I read press releases or Medium articles or whatever, and there's not the word trade-off in it, I tend to close it right away because it's just shilling something, and it's not taking an objective view or trying to at least present the upside and the downsides, and at least mention the downsides. That I would say that is part of a fair marketing campaign also in crypto. So there's always trade-offs, and yes, security and gas fees seems to be a trade-off, particularly when looking at Ethereum. Now, I don't know. I mean, first of all, it's important to note though that there's some other aspects to the Ethereum, the Ether price as well. So I think the staking percentage right now is somewhere around like 16% or so. So that's the lowest of all proof of stake networks as far as I know, and significantly lower than Solana, for example, at least when it was, I don't know, I didn't look after the crash, but I'd assume it's probably somewhere the same range, more like 60% or something. So that's significantly lower, and I don't expect that to shift, majorly. It might go up over time, and with Shanghai, some people say it goes up, some people say it goes down, but either way, I don't see it go over 25%, in any given scenario anytime soon. So, and like Saga was saying, I think it much more depends on speculation and other types of, hypes and bulls and whatnot. So that's one thing. But also I want to point out that, which obviously is something that the merge brought with the switch to proof of stake, is that the issuance went dramatically down. So that ETH is actually now slightly deflationary, or let's say 0% inflation. And that obviously is also something to consider for where people hold their money. So it's sort of an indirect effect as well, not directly related to the gas fees. So, and then the third aspect that I would like to mention is that you can have so I said in the first two, I said there is a trade-off, and then now I'm saying there might not be such a big trade-off if you're considering layer 2s on Ethereum, because basically you get, or in a mature ecosystem, and we can talk about this as well. But I think as Saga was saying, the layer 2s are still in their infancy, so there's some trade-offs with regards to security. But in theory, the layer 2s inherit the security of the layer 1s, but providing much more block space, therefore lower gas fees. So that's the theory. We're also still in the infancy and early stages there. So there is an option within the Ethereum ecosystem to have this trade-off. But then it's totally okay to go for this or some other type of trade-off into other ecosystems. That's totally fair.
Yeah, and also adding to that, so like the question was whether there's like a relation between security and the gas fees. And I think you, Freddie, said something like in your very first statement, like in the side sentence that I think also worth mentioning here, because because in the end, the gas fees and, for example, at Ethereum are directly related to its popularity, right? So kind of because there's limited block space. So if the blocks are full, you have a bidding war, and this drives the gas fees upwards. And kind of like also we've seen this with Bitcoin also, I don't know, 2017, like the SegWit update discussion and so on and so forth. So there was kind of like the blockchains were full and were not able to process more transactions, and in the end, if you bid on the gas fees to make your transaction happening, then this drives the costs upwards.
Mm-hmm. Actually, I would right away because I've also noted a question in that regard, because I've recently had a very heated discussion also with somebody who was a big blocker. Like somebody promoting big block space for Bitcoin. And I mean, I think this is a discussion that was basically is older than I have been in the crypto space. So I guess you guys probably are way more familiar with that discussion than I am. But for me personally, please correct me if I'm wrong, it has also something to do with that essentially the internet always gets quicker, the hardware always gets quicker. We have essentially always like a progress in technology. However, for now, the block space or the block time, so essentially how much can be stored within a block and how many blocks do we basically transact in a certain amount of time, has always stayed the same. Do you guys think that this is something good because it makes things plannable, or do you think that we should maybe, with increasing technological advancements, maybe increase block space and block time?
Yeah, happy to take that one. I think there's a trade-off, right? And Ethereum keeps to this sort of more constant block space, at least for the layer 1, so that everyone can run a home validator. And that's another aspect of security that we didn't mention before, because we were just talking about the value locked in staking, basically, which is obviously an important factor. But the other part is also how many validators are there, and how many independent validators, I should say, because it doesn't matter if someone is having 100,000 validators, like Coinbase. I don't know what the number is, but so that's a trade-off that the Ethereum community is very, I think, united on in terms of keeping the hardware requirements and the bandwidth requirements to running a node low, so that there can be good decentralization, because that's, I think, the main unique selling proposition of Ethereum anyway, and they want to keep that. So that's why it makes sense to keep it constant. But I want to point out, even though that might be more of a topic for a separate discussion, is the upcoming proto-dunk sharding, aka 4844, which allows the layer 2s to actually add more block space. And that's a very interesting trade-off, basically, because then Ethereum layer 1 enables, or the staking on layer 1 enables more block space for layer 2s, which some people say they're competing. I don't really see it that way. But so it offers that, and it offers that only temporarily, so that the state growth, because one is the actual latency and the bandwidth needed to transmit large blocks, but the other part is also state growth. And if you ever try to run a Solana node, I mean, one of the challenges is both bandwidth and the storage requirements and access to history and all of that. So that's another reason why the block space will be kept limited in Ethereum, I believe, for the foreseeable future. But there is some alternative ways that are now being prototyped, basically, on Ethereum to scale the layer 2s and sidechains on the consensus layer for a limited time and a limited amount. So I think that's a very interesting experiment, and we're happy to discuss that in maybe another panel.
Christian, sorry, coming back to the last question, actually, but Freddie, may I ask, I'm not sure. So I have the question regarding how many percentage of total supply of Ethereum can be staked at a time? Is it 25 or more?
25%, you mean? Or there's no limit. Okay. It can go as high as people think. But my reasoning why I say it's not going to go up to levels like Solana is that Ether as gas fee and as currency and collateral has so much other use cases that people are not going to go, and the APY is also a little bit lower than on other networks. So that's why I think the capital is just distributed differently. But there's no cap or anything.
But I also agreed with you or your thesis, because I think we can also look at the traditional side, right? Like, we all live in Germany, so we have in one bank account, there's 2 bank account, which is Sparkonto, right? So even everyone, so it's a little bit, I'm not a psychologist, but I think it's a human tendency, right? So even though you're lots of liquid euro, but you only put particular amount of your cash into that Sparkonto. I'm not doing that, by the way, but sort of that doesn't mean all the people who are earning every month their wages, they are putting 50% or whatever amount of money left after deducting all their lifestyle costs, right? So I think that's the same analogy we can apply here in any blockchain. So I'm sort of agree that I think it would be a stagnate between 20 to 30% of total supply, because there's so many players who would like to keep their Ethereum liquid because of so many reasons. Let's say they want to speculate, or they want to use in different ecosystem, or buy and sell, or use it for different kind of activities on the particular blockchain. But the one thing I read also today on Pantera's newsletter, I highly recommend to read everyone. They have the annual letter came out. So I think they made also one of the good justification was how about we we are able to do it like a DeFi trades on Ethereum blockchain without paying the gas fees in Ethereum. So let's say like you are doing trade on any sex exchanges, right? Like Binance, Kraken. There you don't need to have all the time Ethereum. Basically, they deduct from your native token. So let's say like you are trading USDC to Polygon or any other token, then they take particular chunk of amount from USDC or either Polygon based on your trade. So I think that is going to be like a really big use case. If we move from Ethereum to native token, then I think this would be game changer. So I have no doubt this would be possible in upcoming days, because back in days in 2013, 2014, there was some developers, coders were writing in the forum like, okay, how about atomic swap, but now things are literally a reality that we can go to any DEX and trade the token without relying on any third party, right? I mean, even on OTC side deals, you can just go to DEX, and some even like OTC, like a desk, they can send you the link and you can literally fill out your order. So you don't have to rely on the OTC desk that you send your stable coin or other currency, and then you have to rely on them that they are sending back your whatever currency you are looking for, right? So I think there's a lot to discuss, but yeah, that's from my side. Christian, over to you.
Yeah. So actually, I also wanted to add one more aspect also on your question, because you were kind of like comparing kind of like, can we achieve scalability through like hardware scaling, right? So this was like a little bit like the gist of the question, and I think it's always like, so when we talk about scalability, we need to really define like what we are talking about. Like, is it speed? Is it size? Or is it whatever, like transaction growth, like amount of transactions? So this is just like scalability is like a bucket term, so that can contain different topics. And so from my point of view, I think it's like for like and also kind of like, usually like in computer science, like scalability also means like so like with like whatever static growth, does like the performance go whatever logarithmic or linear or exponential, and then especially on the long term, so when you have like a lot of load on your system, whether so you can still like grow linearly with adding more machines, or if if this doesn't work, right? I think at the current state of blockchains, we're still like in a very experimental stage. Kind of nobody knows how many transactions need to be processed through a blockchain system, because we don't know like what use cases will be used in the future, and where is it all going. Is it now replacing banking and stock exchanges, or is it not? Or is there the hybrid scenarios? Is there like how much goes from CeFi to DeFi or vice versa? So this is like, there's like a lot of open questions, but on the long run, so I think like if you have the option to grow with or like to add more hardware to your problem, I think that's good, but still we will it remains to be seen how blockchains also in the future might need to find like other solutions to scale, because so if we're taking over the world, then this will be a lot of transactions.
Which is hopefully the plan, to take over the world, at least for me in the financial sector with blockchain. But I think you made a very good point, and I think this is also something that we just need more research into it, because, and this is also why I like that there's so many different L1s out there, not only Ethereum, but also Solana, Avalanche, Phantom, whoever, because they all follow up on different approaches. And I think everybody will look at what's the other one doing, and then certainly compare on, is there maybe some benefit that we can also integrate within our systems. And one thing that I would like to highlight also is that during the bull market, there was also the times where on Aave, I remember a transaction was costing $20, $30, $40. So it seems like even though, let's say you have a quicker ledger, there still needs to be research done. And actually the same even for Phantom. I think for Phantom, we have like 50 or 60 validators, which is fairly low in comparison to, let's say, for example, Solana or to Ethereum. And I still remember that I had to play with like the gas fee function on MetaMask so much, and just hammer in like very high numbers so that the transaction went through, because it was just congested. Like you're used to it from Ethereum, for example. And there is also like now a very good question connecting to that from the audience. And the question goes, is there a trend of more centralized blockchains having lower gas fees than decentralized ones? somebody would like maybe to answer on that.
Yeah, so why not? I definitely think so. I mean, this is what we see. We see more. I mean, this is always was always the discussion. Decentralization, where the speed and cost topics, and yeah, if we have a look at Ethereum, for example, I mean, this is the largest and most decentralized blockchain, and it's also one of the slowest blockchains that we can use. So I will definitely answer this question with yes.
So I think for the audience, I think really good question, but the cheapest things comes at cost. Okay, so let's say like if you don't want to use Ethereum or Solana decentralized chain, right? Then you use the centralized chain, then it might be fiasco like also FTX or Celsius, you know. So sometimes it's better to pay the higher price and be sure and secure rather than just play around with it's like a security compromise between Fiat Panda and BMW X6, right? So its choice is up to you guys, but this could be true. I mean, if you're playing with centralized player, then as I said, like sometimes you pay the higher fees in terms of losing all your networks.
Yeah, and also like the more centralized you get, the less you are a blockchain, right? So because so I think there's like this discussion also from, let's say, 2017, like about like permissioned and permissionless blockchains. So I always said like, okay, for me, like a permissioned blockchain is not a blockchain, because you can whatever create a REST API, agree with your 5 parties you're transacting with, and do this. So this like the idea and kind of also I would say the strength of like a blockchain ecosystem is that it's decentralized. There are many players and it's open to everyone, and kind of like the decentralization grows and goes down like over like popularity and different metrics, but over time, kind of like having, for example, such a network like Ethereum being super decentralized, everyone can participate, everyone can build on top of that and transact. I think that's the core strength, and that's why we need blockchains.
I think it's also related with the intranet and internet back in days. So because back in days, like when the internet came into action, the people was talking about like we're going to regulate the internet, and that's how they invented this intranet, so-called. But I mean, we all are already victim of that thing. Like intranet was like a super flop show. So it's the same thing. Like if you use the private blockchain, then of course they can track all your transaction and you don't have any privacy. So good luck with that.
The one interesting aspect is also that we haven't heard anybody mentioning the Binance Smart Chain yet. So I guess that this chain has been so far not considered decentralized nor worth in regards to, let's say, building DeFi applications on top. However, I don't want to slam any applications building on Binance Smart Chain. I know that there's also very dedicated developers on that chain. One would be, for example, I think Gambit or GMX, which has originated from that chain. So I think every ecosystem has worthy builders on top of it.
Christian, just a disclaimer. Yeah. I was with the one VC who is very close to CZ. So if you ever planning to go fundraise as an ITSA from Binance and CZ, then CZ has the blacklist, you know. So basically, once you go into the blacklist of CZ, then you never get a grant, you know. So make sure you choose your wording properly.
No, I have to say, you know, like, no. That's the thing, you know, I still like many projects on the Binance Smart Chain, but I really feel like it's like the lack of decentralization and how everything is set up, which makes it way less interesting for applications maybe to stay there also in the long term. And I think the fact that Gambit actually moved away from Binance Smart Chain and opted for Arbitrum is just also somewhat a proof for that, you know. But maybe in the future they can make certain changes to that, and then it becomes also more interesting for builders to participate in that ecosystem. Now, because we were just talking about it, and I had that on my list as well about a question, also especially to you, Peter, and to SolarX. We were not talking about block space, block time, all such kind of metrics, but there's also something called time to finality, where essentially I think it's about how quickly a transaction is settled on a ledger, and I think Solana is very much leading also in that regard. Was it also something that was important for your considerations, or how did that play out?
Yeah, so maybe I start. For us it was very important. because also with the whole product we go a little bit against the trend. I always say, because like everyone is approaching us like, hey, do you have a browser extension wallet? And we say like no, so we're mobile first, and because like everyone in the world is moving from desktop to the mobile phone, and using any application from the mobile phone, and users on mobile phones really want to have snappy responses. Yeah, so just like things need to happen very fast. And so if you look at Ethereum, whatever, 12 seconds for a block confirmation is a long time, especially when you want to create a snappy application. And even like in the proof of work times, so where kind of like there was like a variety or like variance of block times, it was like even worse. And so Solana with 400 milliseconds is really also a great platform to provide a great UI. And transactions don't go in a mempool, so which means so they either work or they fail, and if they fail, you can retry. So this is in the end, like for a mobile product, a really great foundation to provide great UX. And adding on top of that, also like for protocols, using Solana. In the end, in the Ethereum world, we see a lot of DEXs following the automated market maker model, because this is probably the best way or the most scalable way to operate a DEX on the Ethereum blockchain. In Solana, you have central limit order book block DEXs, so where you can kind of like almost build exchanges that mimic how centralized exchanges work, and can have an order book like with Serum. So it's so I think this is like those are like the use cases where we see like, okay, you can do actually more than you can do with Ethereum, and that's what excites us with Solana.
Yeah,
interesting.
I totally agree. Actually, I mean, yeah, of course, definitely order books are something that work very well on Solana, because due to the fast and quick execution and settlement speeds. And for us, especially, I mean, we did not have only a look at the UI, how fast does a transaction work once a user does a transaction on our platform, but also everything that happens in the background within our protocol was very important, because what we do is, I mean, as our protocol itself manages a lot of liquidity, it has to do a lot of transactions. And as I said earlier, when a user, for example, comes to our platform and provides liquidity by staking only, let's say, USDC to one pool, then our protocol distributes that liquidity towards multiple pools at the same time. And then it also rebalances these liquidity allocations at different pools. And I mean, of course, theoretically, the shorter the time frame between these rebalancing actions is, the better and the more efficient the capital is used. And that means we need a blockchain that is very cheap and very fast by doing so, because otherwise I mean, of course, it would still work with slower transactions, but it would become very difficult, especially if we are talking about slow and expensive transactions. So that makes Solana a perfect match for our business case and our protocol, our product itself. And yeah.
Saga, you want to add something? You unmuted yourself.
Yeah, I mean, see, from my side, I mean, fundamentally, always I think about like, it doesn't matter how big is your block size or how many transactions you can process, but when everyone is trying to access your network, either way, it's a Citibank transaction or the blockchain transaction, when there is a mass who are trying to access your ecosystem, you know, then you have some chaos. So it doesn't matter in next 6 to 12 months, like Solana or either Ethereum or any L2s, they will try to, you know, make the bigger space size. But as I'm saying, like we are like almost like 8 billion people in this world, like 9 billion people. And then if like majority of the portion trying to access the one ecosystem at the time, something like bank run, right? So even though like a banking system or like that's institutional side is like everything is regulated, that doesn't mean there is no fraud. Fraud happens still today. On top of that, if there is a bank run today, I'm sure like even with like a fully heavily regulated entity, they wouldn't be managed to able like, you know, this chaos. So we do our best. We can always come with like our arguments and we can justify with each other. But as long as my concern is that like any individual entity or ecosystem can have like some bad or downtime because of the heavy mass. So as long as there is an ecosystem is properly well balanced, then you have everything through. And that you can say like about $60. I think, Christian, you were really generous about Ethereum gas fees on $60, but I remember I paid one time $700. So it can go worse, you know, something like there's a New York taxi fight. Like there's a 10 guys are waiting to get into the taxi in the city of New York after working hours. And it doesn't matter, you're 6 lane or 7 lanes. During on and off time working hours, there will be like a chaos on the street. So it can happen same on Ethereum or Solana as well.
Mm-hmm. Actually, there was a question also just now in the audience, which I think is very good aiming at that. It goes, isn't the fee problem similar to the road problem for cars? If you build it, cars will come. If you offer more block space, people will come. So I think this is essentially what you were just talking about, right?
Yeah, actually, so as you, Saga, said something on New York, so which is like completely off topic with blockchains, but which I realized that kind of like there's so much traffic jam in New York, not because the roads are big enough, simply because they are all one-way roads, and kind of like if people want to get to a certain point, they come like into each other. So kind of like there's traffic jams because like the roads are blocking each other. So if there wouldn't be like any one-way roads, it would be probably more scalable to go by car through New York. But that's just my thesis.
But in that sense, we have the layer 2, right, on Ethereum. So let's say like if the road doesn't work, we build the metro or underground, so that act as in layer 2.
Actually, this is like the perfect crossover, because I just wanted to touch NL2s, and that's perfect, guys. Thank you very much for that. Because the next question is directed towards you, Freddie. L2s have become like super popular. I think Arbitrum has been a very successful story. Optimism is also now catching up. I think there's many great projects already active on them. I think for Arbitrum especially, we can say Uniswap is there, GMX, Perpetual Exchange is there. On Optimism, we see Synthetix being very active. However, what I have been finding out recently was that the security of whether it's a Polygon or Arbitrum, or I'm not so sure about Optimism, is questionable, as there are very often multi-signatures involved, where, let's say, for example, 5 out of 8 peers from the party have to sign, and then essentially they could harm the L2. What's your take on that? Because I think this goes very much back to what we had before, that security always has a price. We have no cheap transaction fees on L2s, and suddenly the security is again questionable. What's your take on that?
Yeah, you're right. And I think if we go back into this discussion like 45 minutes ago, I think we said that we're still on training wheels, right? In these layer 2s, they're very new. They're younger than Solana, and Saga was giving Solana the point that it still needs some time to grow up, and I would say the same for the layer 2s, and I think they will increase their security. They have pretty clear paths to decentralization and therefore more security in a way. We also touched on the fact that security is multifaceted. So there's maybe, and I'm by far not an expert on this, but there's the relayer, for example, that is very much centralized still, but there might be oracles involved that are more decentralized, or there might be the upgrade mechanisms that depend on the multisig or whatnot. So even like I wouldn't say that a layer 2 is dependent on a multisig or something. That might be one aspect, let's say the upgradability or the emergency shutdown or whatever. But there's many facets there. So really, what I think, because I'm always a man of practicalities, I think one good advice that we can give to the audience is the l2beat.com website. I think it's the best website in terms of getting an overview of the layer 2s and what technology they're based on, because there's also different technologies and how they can be run. And they also have great background on security. So that's a super helpful resource. And the other part that I wanted to point out is that Vitalik himself actually made recently a proposal to standardize the security classification of a layer 2, so that you could actually say, okay, this is an infant or adolescent or a grown-up or a grandpa or whatever, and have sort of, I don't know, let's say traffic light indicators of very simple to understand for the masses, because we're talking about the masses. Like, we might be able to figure out and make an objective decision on what we want to do as a trade-off, but my mom and pop, I mean, they can't use email properly, so definitely not. But those are the ones that would be using it if we're talking about masses. So we generally, I think, need to simplify this a lot more. And there was just this initiative that maybe we can sort of find a common classification around certain classes, and that would help tremendously. And until then, I think l2b.com would be a good resource for keeping oneself informed.
So for L2, I also have the really good example. I'm sorry, I'm like becoming historian now, but that's the easiest way to explain the things, in blockchain world. So when the Wright brothers in 1903 test first flight, then the people were raising question like, oh my God, it's really high risk prone. We have cars, why do we need aeroplane, right? We have ships, why do we need aeroplane? And within 7 years, in 1910, so almost like we are like 120 years plus, the first cargo flight took off between the like US to Europe, right? So what my point is that I'm trying to prove is that, like, of course, there is some security concerns over there for the L2s, but let's say like there are some gaming and NFT players, right? Those who wants to give you the in-game assets in your gaming asset, in your game, which you are playing. Ethereum is not feasible. So of course the gaming is like $1 billion economy, but still I don't think so as an individual gamer would like to spend like 15 to 10 or $5 on each transaction. So for that, I think we can use the L2. So L2 will be like a backbone for like a cheaper gas price and faster, right? So look at the Polygon or Arbitrum. Of course, there is some liquidity issues because there is no close to zero traction now because the people are not using that thing. The whole bull bubble market is gone. So there's less speculation happening on L2, but that doesn't mean there's something wrong with L2. Of course, they are building, but it is much more like centralized, I would say, entity. But over the time, they will also come over with this whole centralization and security issues, and they will come out stronger. It just takes time. Things need some time to get built, and then you have like a bug bounty program, and then some smart, talented guys try to either way hack all the system and take away all the monies, or they become like a white hacker and then tell you like, guys, here is the problem, you try to solve it, or I can solve it and you give me money, And so both kind of player you can find out in our ecosystem and everywhere, I think. And I think the layer 2, as long as I see, is like, as I said, like I still like to live in Munich, so I would be using Ethereum all the time. But let's say like if I become like a gamer or an NFT guy, then maybe I move to Solana for that particular purpose and use the L2 also for that particular purpose. And I think Freddie gave the best example, like parents cannot use the email. So let's consider like even your parents can use the Facebook or email. So they know like how to open the Gmail, write down the email address and write it the contents and send it. So they don't need to know the backend process, right? Like how they're using the certificate and sending from other centralized entity to the other side of email. So that's exactly going to happen with blockchain. In backend, blockchain will be working either with Solana, Phantom, Polygon, or Ethereum, or any other L1, right? Or L2. As long as you are serving the motive of the function or like a product, I think that should be fine. So for example, even I'm an engineer, but I don't understand like how the backend of credit card service works. I just put my card there, put my PIN, and that's it. Backend, I really don't care. So it's the same with the car. So do you guys really care about like which kind of cables or which company cables are getting used in BMW car, as long as you can drive it, right, with the pool of plug? So I think sometimes it's really not important for the mass to understand all the fundamental level. We are techies, so maybe we have some time to look into it, but rest of the world is so busy with their own stuff and own problems. So they just want to make their life easier, so they just use the cheap card or to payment solution, or like use the highly secure card so they can go from A to B. And that's the same with the blockchain, I think.
And I think just quick info for you guys, we shouldn't worry that much about adoption, because over Christmas I gave a crash course on cryptos to my retired retired neighbor who was a teacher. So also among, let's say, the generation of my parents and maybe even a bit older, there's right now a lot of interest in crypto. And I think that's a good sign for all of us. And yeah, I think there's a bright future. We just have to. Yeah, Sagar?
Sorry to again bumping into the conversation, but how was the crypto like a Christmas dinner? Because I heard that last 2 years of Christmas dinner that you're telling your family and friends that buy Bitcoin, and I'm sure either way you didn't get invitation or you just choose the one corner and stay calm. You know, like
the good thing was, on the one hand, the funds were all with me. However, so it is all on me, but we discuss it on another time, Sagar. I think it's better not here. So let's wrap up the panel because we are already 1 minute over. Maybe we could all give like a little outlook for 2023. I really like to do that at the end of the panels. Maybe Peter and SolarX, you can maybe also shortly comment on what's your view on the Solana ecosystem for 23, but in general, just like in terms of L1s, DeFi, what are you guys looking forward to? What are the things that you expect happening? Maybe Sagar, you start first, and then we go through the row.
So of course there is no like any financial advice, and I'm not going to speculate on any token, but as Panthera said today, and we are saying since last 2 years, so the bear market is the best time to build the product, right? And find the right market fit. I think it's a little bit funny that majority of the founders building in the blockchain ecosystem, they don't know what is product market fit looks like. So maybe Peter can give sometime, you know, like one seminar on what is product market fit, and I think he's the right person to explain like what is product market fit and how to build it, because this time the talent get cheaper and there's less competition, of course, because lots of noise are already wiped out, and maybe they will wiped out in next 3 to 6 months. So bear market is for building, and of course you have a hard time to raise the fund, but I'm saying like if you're building the right product and if you're targeting the right market at the right time, then it wouldn't be hard. So you need to be super convinced about what you're building. It doesn't matter every day you're getting punched from other people that you are building wrong thing, but as long as you are convinced about your product, what you're building, then it should be fine. And same with the VCs. VCs deploy like here and there, signing soft and equity deals in bull market without any due diligence. Best example is like Sequoia getting wrecked in FTX. So I think you just stay humble and keep building and help each other out. And I think our community is really small. So if any of you need some help in my limit, I would be happy to help out, making some introduction and give the right advice without any kind of expectation. So feel free to reach out to me. Yeah.
The next, Freddie.
Very nicely put, Sagar, and always happy to help as well in my limited capacity. But what I'm most excited about is the layer 2s, actually. I think they were hyped last year in the L222 meme. Now they're like the L223 meme. Not sure if we're going to see full adoption of the proto-dunk sharding yet, but I think that's a great step forward, both for the layer 2s, but also for Ethereum in the direction of sharding, and just another big milestone after proof of stake that they implement on their roadmap. So I'm very excited about that. And yeah, other than that, I'm also happy that the noise gets down a little bit and more focus on the building. I think that's good for the overall ecosystems as well.
I can just share that opinion, especially on the noise. Let's hope that they're not going to be that much more of this Genesis, Barry Silbert, whoever. Peter, your stage.
Yeah. So yeah, 23 will be like an exciting year again. So like that, all the previous years, probably also with a lot of surprises. So what we see coming is, well, DeFi is coming to mobile. So also with like the Solana mobile stack and the Solana phone. And like X NFTs and so on, just like really making it make it more easy to actually integrate with DeFi, and then building it out like on the mobile phone. So also like we do. Also, I think we've like in 22 we've seen like the CeFi world somehow getting in a lot of trouble, and the DeFi world running pretty smoothly along the lines without, I think, public media really noticing it. And deriving from that, so we really believe that DeFi now has the opportunity to shine and really to show that it's actually much more capable to serve financial services to people, and having assets under their own control, not trusting like an organization of humans who whatever do criminal have criminal intentions. So you only have to trust yourself and the technology. I think that's a great opportunity. And when talking about that, well, we've seen a lot of CeFi exchanges failing. So we believe that that's also now the time for like mobile trading experience. DEXs are there. It's great to trade on DEXs, but somehow like also on mobile, the experience is lacking. So we're really curious also to bring this space further. And maybe as a last point, also due to like 22, with all the fails, and I think also a lot of newspapers, politicians talking about like how bad crypto is. I think it's also about us really to show what the core of crypto is and what the core philosophy is. And it's coming with really good intentions and giving humans a lot of power. And let's really bring this message to also like to the mainstream people, but also to journalists, politicians, regulators, because I think we can by far solve more problems than we create. So that's definitely, so we definitely have to make DeFi really, really again more really advertise for it that it's a great thing, and that the whole society can benefit.
Mm-hmm. I actually fully agree with you, Peter, especially because I just had like 2 days ago a discussion on that topic about how crypto can really help people in like underbanked countries who have really little to no access to a good financial system. And I think this was very long also the promise of crypto. And I think this is also something that we should focus for 2023 again, to basically involve more people and give them more chances, more opportunities. And then last but not least, SolarX. I'm also very interested in your take.
Yeah, sure. So, I mean, as these current market conditions or the previous market conditions are the best times to build. So that means we think 2023 will be the year where we will see lots of developments in terms of the critical infrastructure for the whole blockchain ecosystem, but also the critical infrastructure which is needed for the whole DeFi ecosystem. So what we will see there, in our opinion, is, I mean, if we stick to Solana, for example, we will see Solana virtual machine. We will see protocols like Fuel or Eclipse that enable app-specific rollups that are connected through within the Cosmos ecosystem and so on. We will see these projects arise. We will see infrastructures that are connected with each other. We will see, I mean, layer one will also be one of the hot topics, definitely, that might be, growing and stepping out of the initial steps. And what we will see is liquidity, which is spread towards different ecosystems in terms of the DeFi, if we stick to DeFi. I'm not sure about bridges, if we will still see bridges as we know them. I mean, there are still a lot of security concerns. We have other solutions out there that, I mean, they're still in the early stages, like layer 0 and so on. But so that means I'm not really sure regarding bridges and other topics that are, in my opinion, relevant beside these infrastructure topics are Zero Knowledge and the topic of privacy, also in terms of DeFi. Thank you.
Mm-hmm. Thank you very much, SolarX developer. So was for me an excellent panel, having 4 experts in regard to L1s and also in regard to DeFi. I have to admit, I again learned a lot, and I hope it's the same for the audience. And I'm very happy to maybe do another panel even with you guys at the end of the year again, and then we can maybe reflect also what was happening over the course of the year. But for now, thanks for participating. Same to the audience. I wish you a nice rest of the week, and let's talk soon again.
Yeah, and big shout out to Christian and ITS team. Thanks for organizing an opportunity.
You're welcome.
Thank you.
Thank you very much.
Bye.
Thanks. Bye-bye.
Bye.